वेलकम टू वी लर्न में आपका स्वागत है। सब्जेक्ट इंडियन फाइनेंशियल सिस्टम, सेशन नंबर 9। Topic covered in this session: Capital Market 1, Secondary Market, Working of Stock Exchange of India, Transfer of Fund and its concept. Now, Capital Market और Secondary Market. सेशन 8 में मैंने आपको बताया था मनी मार्केट के बारे में एंड मनी मार्केट के इंस्ट्रूमेंट। एंड अब कैपिटल मार्केट मीन्स द मार्केट वेयर द लॉन्ग टर्म इंस्ट्रूमेंट आर ट्रेडेड। ऐसा मार्केट जहां लॉन्ग टर्म इंस्ट्रूमेंट ट्रेड किए जाते हैं वो आपका कैपिटल मार्केट होता है या सेकेंडरी मार्केट कहते हैं। कैपिटल मार्केट लार्जली डील्स with the securities such as equity shares, preference shares, bonds and debentures. We also know that securities market is divided into two segments, namely the primary market and secondary market. The secondary market of securities is an important component of the capital market. It is the market where shares, bonds, debentures and other securities are traded. Once these securities are floated, subscribed to and issued to the public, they are traded in the secondary market which is called stock market. और हम ये भी कह सकते हैं कि सेकेंडरी मार्केट का जो मेन इंस्टीट्यूशंस होता है वो स्टॉक मार्केट होता है। स्टॉक मार्केट के थ्रू जो सिक्योरिटीज ट्रेड की जाती हैं वो सेकेंडरी मार्केट होता है। एंड नाउ stock exchange in India. The market where securities are traded is called the stock exchange. Presently there are 23 stock exchanges in the country. Bombay Stock Exchange BSE is the oldest and principal stock exchange in India. During the last decade, National Stock Exchange NSE with its wide network across the country has become the premier stock exchange in the country. Another new nation's wide exchange is Over the Counter Exchange of India, ICEI. The stock exchange in India are organized either as voluntary non-profit making organizations or as public limited companies limited by shares or by guarantees. Trading system. Dealing in securities at the stock exchange has traditionally been undertaken on the trading floor of the stock exchange. This traditional system is now being largely replaced by computerized online system of trading. We shall first deal with the traditional system of trading, followed by the new online system. Now traditional trading system. Traditional trading system dealing at a stock exchange are permitted only in the listed securities. The terms listing of securities means that the securities concerned has been included in the list of securities to be transacted at the stock exchange. Online trading system. A revolutionary change of great significance has taken place with the introduction of online trading system, which has replaced the traditional system. The Bombay Stock Exchange introduced this system, which is known as Bombay Stock Exchange Online Trading BOLT, B-O-L-T. Under the online trading system, the trading floor dealing have been declared or discarded. Brokers transact business through their computers, which are linked with the main computer of stock exchange through VSAT, very small aperture terminals, which have started functioning at various centers. Settlement procedures for traded security. Specified securities include actively traded shares of large growth oriented companies. Only a limited number of shares fall in this group, but they account for major portions of capitalization in India or Indian stock market. Non-specified securities are securities other than the specified securities. There are two methods for settlement of transaction in specified securities. Carry forward system. Under this system, the transactions are settled at the end of each settlement period, which is generally of 2 weeks, commencing on Friday and ending on Thursday of second following week. At the end of the settlement period, in Friday, the members decide whether the transaction is settled or if it is to be further carried forward. Rolling settlement system. In January 1998, SEBI introduced rolling settlement system on a voluntary basis on the stock exchange for securities which were eligible for demat trading. In January 2000, compulsory rolling settlement was introduced for 10 scripts. By May 2000, the number of such scripts was gradually increased to 163 and with effect from July 2, 2001 to 251. Rolling settlement was extended to the remaining scripts on all stock exchanges by December 31st, 2001. Transfer system. After the transactions is complete by settlement and delivery of share certificates to the buyer, the latter has to get the share certificates transferred in his own name. For this purpose, the transferor has to sign on the prescribed transfer deed, which must be duly stamped, dated, and witnessed. Thereafter, it is signed by the transferee and along with share certificate is sent to the registered office of the issuer company or its registrar who handle the shareholders register and transfers. The company will tally transferor's signature with this specimen signatures given at the time of applying for the shares and other details. If everything is found in order, the shares are transferred in the name of the transferee. Second, an endorsement to this effect is made on the back of the share certificates. Necessary entries are also made in the register members or registers of members. Share certificates are then sent back to the transferee. Company is allowed 2 months time to complete this transfer procedures. And now departmentalization of security. One of the most important reforms in the Indian capital market has been the introduction of dematerializations of securities. Dematerialization means that the securities do not exist in the physical form, that is, in the form of share, bond, certificates, but holding of such securities are only recorded in the books of an institution called depository. Whenever a shareholder transfers his shares to another person, he informs the depository, which makes necessary entries in its books to record such transaction. Thus, the transfer process is facilitated and made foolproof without various disadvantages of physical transfer of shares. National Stock Exchange. National Stock Exchange NSE was incorporated in 1992 to provide nationwide stock trading facilities. Its promoters are the leading financial institutions, that is IDBI, IFCI, ICICI, LIC, GIC, SEBI Capital Markets Limited, Stock Holding Corporation of India, and Infrastructure Leasing and Financial Service Limited. It provides a fully automated screen-based trading system. And now, wholesale segments. In this segment, institutions, including subsidiaries of banks engaged in financial services and corporate bodies, can enter into high value transactions in debt instruments such as public sector undertaking, bond treasury bills, government securities, units of UTI, commercial papers, certificates of deposits, CDs, floating rate bonds, etc. The members can trade on their own behalf as well as on behalf of their clients. And now capital market segment. This segment deals with equities in India and retail trade in convertible or non-convertible debentures. Any hybrids, the securities of medium and large companies with nationwide investor base are dealt with securities which are traded on other stock. Exchanges can also be traded at NSE, National Stock Exchange. National Stock Exchange has fully automated screen-based trading system. It is connected through a very small earth-based aperture terminal VSAT or through leased telephone lines. Over the Counter Exchange of India, OTCI. OTCI is also a totally computerized, ringlets screen based automated stock exchange. It was established as a company under Section 25 of the Company Act in 1990 by 8 financial institutions. The main objective of its establishment was to help enterprising promoters to set up their projects by raising capital from the market easily and cheaply. A company whose security is to be transacted at OTCI must be sponsored by a sponsor, a financial institutions, mutual fund, scheduled bank. Its subsidiaries and merchant bankers approved by SEBI may be the sponsor. They are high net worth entities, small and medium sized. They are high net worth entities, small and medium sized company which are unable to meet the listing requirements of other stock exchanges, that is minimum capital requirements of rupees 3 crores, can be sponsored by any of the sponsors at the OTCI. If they have issued capital of rupees 30 lakhs and above, the sponsor member is also required to give two-way quotes for the scrip. The price at which they are ready to buy and to sell the securities of the sponsored company for at least 18 months. In addition, there may be another market maker giving two-way quotes for the scrips. Trading in derivatives. A significant development in the Indian stock market during recent year 2000 to 2001 has been the introduction of trading in equity derivative at the stock exchange. And derivative is a latest tools, that the derivative was started in India in 1997. Derivative products which are permitted to be transacted include both options and futures on both equity index and on individual stocks. Thus, there are 4 equity derivative products available in Indian stock markets. The introduction of trading in equity derivatives was recommended by the L.C. Gupta Committee on derivatives primarily to provide hedging facility against market risk to the equity holders. Derivatives are those products which have no independent value of its own. Its value is derived from the value of some other assets underlying it. For example, in case of individual shares, derivative its value depends upon the value of share concerned. And now deep discount bond. This bond is issued at a discount on the face value. The face value is paid at the maturity. These bonds are also known as zero coupon bond. And now dematerialization. Securities do not exist in physical form, that is in the shape of share certificates. Instead of holding of securities by an investor is recorded electronically by the securities depository. Any transactions undertaken by the investors is recorded in the books of the depository, and no physical delivery of the security is neither taken nor given. And now do it yourself. What is trading system at a stock exchange? And question number 2, what is the working of stock exchange of India? And that's it from session number 9. Thank you.
बाईस मिनट सर
सेव के लिए
इसे